which has been at 10 point something across, that is generally the industry average in unit trusts, may go up to 11 or 12. So these guys are managing it professionally, that they can even see it as the TB rate goes to say 15. They keep investing across the yield curve. So at the end, your return may also be increased if you are in a unit trust without any intervention of yours. Reason, the professional manager is looking at where the rates are and they keep moving with investing for better returns over time. So, and currently they are still tax-free, I always mention it.
Yes.
So whatever you make as a return in a unit trust is tax-free currently. And usually, of course, as history has it, no one wants to pay taxes, much as it's our obligation, but everyone tries to mitigate how much tax they pay.
Yeah.
So, to me, I'm seeing a shift from the traditional fixed deposits to one, T-bills and bonds, and two, into the unit trust, so those asset management units. Yeah.
Let's talk about, before we wind up this segment, the diversification of our products here in Uganda. I've looked at the Nairobi market, the financial markets generally. They have different facets, like, for example, the exchange traded funds, very famous there.
Yes.
They have the derivatives, also very famous. Don't you think in times like this, like inflation and all these things that are bombarding the economy, we need a little bit of diversification, especially for our product types? Because even when you go to the United States, the people run to hedge funds, people run to ETFs in times like this for safety, because those other asset classes provide safety because of how they diversify your portfolio. Don't you think it's also high time for us to do a little bit of diversification?
Thank you for that. When you talk about diversification, first of all, it takes an enabling regulatory environment. Currently, in our regulations, the ETFs the rules and regulations are being developed. At least I've seen a paper with the regulators, the capital markets and the exchange. That may not be something that may come to fruit, at least this financial year, but that road is being taken. But as I speak now, I would comfortably tell you, we don't have ETFs in our market.
Derivatives.
And derivatives, they are really not yet there because the regulations are still being set up. Also, we need an aggressive awareness campaign, because currently we are still grappling with telling people what a share is,
Yes.
how you benefit from a share.
Yes.
I'll give you an example. It has on a certain show, and it really caught my eye. Someone said, I put in my money and you have paid me a dividend of 5,000 shillings. Mujoga. I saw it. Really, it is because maybe that investor at the time of entry didn't get enough education on how do you gain more. Or when you gain meaningfully, the more you invest into the stock, the bigger the return. But someone who put in, say, 100,000 at an IPO, I think expected to double that. But a dividend which came on his phone really didn't go down well with him. So this is to try to tell you that we as market players still have a huge role to play in investor education. So the ETFs are an option, but unit trusts have become an easier option currently. Because our people have been used to circles. We used to have what we call this niginas, the bibinas. People would know that they are pulling money together for an investment or for a cause. People used to pull money for a party. Currently are pulling money together for an investment, anticipating a return. So in an unstable economic environment like we are in now, where everything is really on the run, unit trusts which have professional managers are the way to go. Yeah, thank you.
Yes, thank you very much, Mr. Musaz. Now, we're going to take a quick breather, but when we return, we want to talk about shares. We talked about the bond market and the money market, and we've seen that definitely in times of inflation, it could be a little bit safer. But how about the equity market? How do you deal with the bear market and still choose shares? Like you said, when there's blood on the streets, it's the best time to go out and get to pick shares. How do you pick them wisely and ensure a return in the future? Stay with us. You're watching Smart 24 TV, and we drive your business.